What's up, guys? It's Mr. Fit to Flourish, and today I wanted to talk about how to draw key levels. People keep asking me, what are those lines on your chart? How did you get them? Are those indicators? No, they're not indicators. They're key levels. So let's talk about how to get good at drawing key levels. First of all, we need to know what key levels are. So key levels are basically areas of support and resistance that are major areas where the stock goes up to and its resistance, it can't get past it. And then levels that the stock goes down to and it can't get below it, that's support. So they're just support and resistance lines. But these are like super good. Super good. Okay, so I call them key levels because sometimes you do go past them. But the main thing is that it gets tested multiple times. If it gets tested multiple times, it's probably an important level. That's all you're looking for. Okay, and I don't use the daily time frame for these key levels. The daily time frame doesn't give you as good information as a lower time frame, like the 2-hour time frame, the 90-minute time frame are the two best time frames, in my opinion, for drawing key levels. 2-hour time frame or 90-minute time frame. You could use the 1 hour. Yeah, 2 hour is the best in my opinion. Okay, and I think so because these levels, I drew these a long time ago, and they still are really good. Look at this on IWM, really good. So first of all, how do you draw these key levels? So number one, what I'm doing is I'm looking at the overall picture of the chart, and all I'm doing, the first thing I'm doing is, okay, what's the highest level we got to? So, well, okay, this level right here looks like we hit it one time here, hit it here. We just go slightly past it, but then if you look to the left, usually if you go to the left, you'll see that the levels are hit multiple times. Probably nothing there. Hold up, let me go back. But I'm looking for these levels to hit, to be hit multiple times. All right. So let me just show a couple examples here. All right. So boom, one hit there. We break through here to the downside, break up to the upside, and then same thing here, break to the upside. But then we get this nice wick tap here. So I'm also looking for wicks to reject off of those levels pretty much to the penny. Okay, pretty much to the penny. I'd have to go pretty far back. These levels are from long ago. Let me go to some of the more recent ones. So more recent ones would be like this here, 223.52. As you can tell, we literally stopped right on it. We're getting rejections on this level multiple times here. And then if we go all the way back, see if I can get back here. All right, there we go. There we go. All right, then I look to the left. You just go to the left on the chart, and you see, look, we stopped there at this 2-hour time frame. We tested the downside on this, and then here we get a wick rejection. We have a breakthrough, and then look at this key level here. We're sitting on top of that. Then we test it as resistance, wick tap to the penny, and then again wick tap to the penny, break up above. And then test there. So levels that we're pretty much testing multiple times. Okay. And then, okay, here's another good example. You can see how those levels I drew over there are acting here as well. So let me kind of I'm gonna go to a chart that I haven't really drawn key levels on before, so that I could just kind of show you exactly what I mean when it comes to key levels. My key levels are insane. Let's see, Apple. I've got key levels on Apple. I have key levels on Google. Kind of have key levels on Google here. See if I can show. We got Amazon. We got some CI. I drew key levels on everything. Ooh, let's do Carvana. I haven't done Carvana in a very long time. All right, so example on Carvana here. So an example on Carvana here is kind of something like this. So I go to the left. This is September 20th. I'm like, hey, why did we stop right here? So all I'm going to do is draw a horizontal line here and see what interactions we have there. So if we go to the left here, we see we have multiple stops right at that level. And then again, we're rejecting right at that level. And then we get a push past, and then we come back, a break above, and then a retest on that line. Okay, and then we have all of this consolidation happening right along that line. We even have wicks tapping it to the penny. So this is actually a very good key level. So if you see a high that we put in, I would mark that as a key level because eventually we're going to break above it, and then it's going to be tested as support. And we tested it here as support. We held and then made a big move to the upside. So 175.73, if you are trading Carvana, that's a pretty big key level. All right. Then we get another push to the upside here. 194.46. It looks like resistance. All of a sudden we break above, and then we test it as support. So a lot of these key levels on the 2-hour time frame, I'm looking for resistance that then turns into support, or just resistance, or just support. But if it's resistance that turns into support, it's usually a very, very good sign that it's a key level. Okay. And then this right here, we have a wick tap here, and we have resistance there. So 202.68 looks like another key level. So let's go over 202, and it looks like we're consolidating right here at 219.88. This might be a key level. So again, look at that consolidation. So I'm using the closes here, and then these wicks kind of go past it, but I'm really interested in these closes. All right, and I go to, oh my gosh, I go to the left, and there's a wick that tapped there to the penny before. So 219.88 is definitely a key level. Okay, definitely a key level. Let's see if I go further back, if I'll see any hits at these levels. I don't know if Carvana's ever been this high. I don't think it's ever been this high. Yeah, I don't think Carvana's ever been this high. There's a lot of order imbalance here on Carvana. So likely if we break below 219.88, this is going to be a huge move to the downside here. And then other key levels here on Carvana. This wick tap here at 234.33. Looks like we hit that multiple times here. Support. Let's see. Kind of looks like this area right here is a key level. Let's see if we can get it better. Yeah, right there. All right, so it looks like at first, at this level, we rejected, then we got to break through, retested it with that wick, but then we ended up breaking through, and then we push up above it, break above, and then sit right on top of it as support. But then we end up opening right at the level, coming down, coming up to test it, couldn't get past it. Wick rejection here, and then we break up above it, support. Finally break below, resistance, and then we have a gap up, break below, resistance, tap it again, tap it. So I'm looking for multiple taps, and here we have that downward tap to the penny, upward tap to the penny. So 251.14, another key level there. Right, another key level there. This level here. Let's see if this is a level. Yeah, it actually looks like it is a level there. Right there, 258.66. Okay, 258.66. So basically, like I said, when I'm drawing these key levels, going on this 2-hour time frame, and then I'm kind of seeing, hey, where are we stopping and starting? On the 2-hour time frame, you can kind of see a lot of these wicks. There are large institutional orders coming in. So if it's a huge topside wick, then it's basically meaning that there's selling happening. So once we get to that level, then an algorithm or it triggers an institutional algorithmic sell. Okay, if there's a big bottom side wick, so long stick at the bottom, that's buying pressure. So that's a large algorithmic buy order taking place. Okay, so that's pretty much how I draw the key levels, real quick stuff. And then I do go back on the daily time frame to see, like, oh, does this make sense? And then when you go to the smaller time frame, you'll see it get hit multiple times. And then it's really helpful for when you're day trading, because once you break above these key levels, then you'll look for the next key level to get hit. You're like, okay, I know today we'll probably move all the way up to that next level. Or if we break below, you're like, okay, I know that we'll probably end up going all the way down to the next level. Or if we open right below a level at the open, you could wait for it to get tested and rejected before making a move. But those key levels are really important to draw in your charts in order to know how far a stock can move and when a big breakout can happen. So hopefully this helps you. 2-hour time frame, 90-minute time frame. So smaller time frames show you a lot of that consolidation and a lot of where price action is stopping and starting. That's all. Support and resistance. That's all you really need when it comes to finding these key levels and understanding how and where stocks will go. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.